Hello, everyone. Today, we are discussing a significant development involving XRP. Papa, a cryptocurrency analyst, just pointed out that the price movement of XRP is forming a symmetrical triangle, which suggests that breakout may be imminent. Technical analysts are aware that this type of wedge pattern typically portends a significant move in the future. The price is getting tighter and tighter, and eventually it will either rise or fall. This is where the fun begins. The Fibonacci extension levels are providing us with some important price objectives if we do break out, and POP has reported that XRP is located exactly inside this structure, according to the chart. Additionally, if we see that bullish move, the upper resistance levels indicate that XRP may soar between $11 and $14. Let's not overlook the possibility of the downside, though. A decline to the $1.70 range might be in store if support fails to hold. Please hit the subscribe button, like this video, and share your thoughts in the comment section before we go into the specifics. I appreciate your help. The Relative Strength Index, RSI, which has been going lower while the price has stayed relatively consistent, is another item that drew my attention. And that typically indicates that pressure is mounting for a major move. Thus, traders are keeping a careful eye on this and anticipating the next move that XRP will make. Let's now discuss the whales. According to a report from time-established whales, they have been amassing XRP in large quantities due to their intriguing actions. And you understand what that means if you've been in the cryptocurrency space long enough. Just before a significant price change, big players typically load up. This symmetrical triangle configuration perfectly matches their buildup, which only strengthens the breakout theory. What is the crucial level to observe then? XRP is currently trading at about 2.41, and if it can maintain above that level, the 2.35 level is vital. We may be anticipating a surge toward the 3.0 to 3.40 zone if we can maintain a daily closing above 2.71. However, things can become a little unstable, and we might see a decline into 2.20 or even the 2.0 to 1.80 zone if it loses that 235 support. There's considerably more to think about if you're a long-term planner. The analyst is looking at a possible rise up to $27 after updating his Bermuda Triangle analysis. Although nothing is definite, and that sounds crazy, there might be significant upside if XE continues to follow historical patterns and those Fibonacci extensions materialize. Now, the XRP community naturally went bananas over this news, which was first relayed by a crypto analyst who provided an update on X. I mean, Ripple has been aiming for this type of institutional adoption for years, and it's finally happening. We're discussing a direct connection between the conventional banking system and Ripple's blockchain, which is precisely what XRP was intended to do. Let's discuss numbers. According to TradingView, XRP has been holding steady at about 246 and has not fallen below the crucial support level of 1.90. Analysts are already forecasting that a new price rally may occur shortly in light of this most recent development. Whether XRP can surpass its yearly peak of 3.40 and rise anymore is the key question. In a recent appearance on Fox Business, financial analyst David Strice stated unequivocally that Ripple is the essential infrastructure required by contemporary financial institutions. Although it's a bold claim, it makes sense. Ripple is not simply another cryptocurrency initiative. It has strong ties to big banks and is supported by a stable coin that is regulated in the US. This is where the situation becomes even more intriguing. John Squire, another analyst, made a potentially game-changing observation. He clarified that SWIFT may actually lose ground to Ripple as the most popular transaction system. Let's face it, SWIFT has been the industry standard for decades, but it's now slow, costly, and somewhat out of date. XRP, on the other hand, provides immediate settlements at significantly reduced costs. We may thus see a significant move away from SWIFT and toward Ripple's on-demand liquidity mechanism, which is now in use by more than 300 financial institutions globally, if banks begin to realize the warning signs. not to mention the case against CC. Now that the legal struggle is over, Ripple can move forward with clarity. Analysts believe that more banks may follow Bank of America's example and include XRP into their systems for this reason as well. Brad Garlinghouse, the CEO of Ripple, recently affirmed that the company's technology is already being used by several central banks. It appears that some of these collaborations are still private, while others have been made public. This suggests that even more significant announcements may be on the horizon. Let's take a moment to zoom out and see the wider picture. XRP occupies a special place in the cryptocurrency market. While Ethereum is the industry leader in smart contracts and Bitcoin is regarded as digital gold, XRP is establishing itself as the link between blockchain and conventional banking. It is designed for efficiency, speed, and actual financial transactions. Additionally, the XRP ledger processes more than 50,000 transactions per second at a fraction of the cost of Ethereum. Ethereum transactions are still somewhat costly and slow in the meantime. Furthermore, it doesn't end there. With initiatives like Ripple US Core-M and Sologenic, Ripple's ecosystem is growing quickly. More use cases are starting to appear, which increases Ripple's appeal to institutions and investors. Because XRP is more cost-effective and scalable, even Ethereum users are beginning to pay attention. Technically speaking, after breaking above 1.97 last year, XRP has been maintaining above its long-term moving averages. Additionally, research indicates that if the momentum continues, XRP may soon reach the 3.40 barrier level. When it makes a breakthrough, things may get pretty exciting. A run toward $5, which would be a significant psychological milestone for XRP holders, is also being predicted by some analysts. Let's dissect this. XRP began the week around 229, which appeared to be a strong base. However, on March 19, it made a fantastic push-up to 259, which thrilled many traders. XRP appeared to be poised for a breakout, but rather than maintaining that momentum, the following day witnessed a drop, which has now brought the price back down to about 2.43. There have been some obvious indications of market uncertainty as it has been trading in a very narrow range between 236 and 2.48. If we focus on the last 48 hours, we can see that XRP has been rather consistent, ranging between 239 and 2.48. It's now hovering around 2.45, but it's interesting to note that some downward pressure is beginning to come in. Thus, this could indicate a few different things. Either XRP is preparing for a breakout, or a retracement may occur before a significant move occurs. Let's now discuss the important levels we should be keeping an eye on. This is when things become crucial, since we may learn more about XRP's future direction in the next 6 hours. A breakout above 248 might be interpreted as a bullish indication, and XR could rise to 2.50 or higher. It might retest the 2.59 level we observed last week if momentum increases. Sellers may gain control if there is a downturn, and the price may fall to the 2.42 level. Short-term difficulties may arise if that level is not maintained. The third situation involves sideways movement. XRP may continue to consolidate between 2.42 and 2.48 if volume remains low and there is no significant push in either direction. This would imply that